Welcome to the October 23rd, 2020 video version of the Wagner Daily. My name is Rick Petticelli. As usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves a nice change of pace, as well as offers some insight as to how we set up our charts, what indicators and time frames we use. As you can see, we try to keep it pretty simple. In terms of indicators, we just use a few moving averages. They're all labeled on the top here. And we use a relative strength line and a moving average along with the volume. Same thing for the weekly chart here. We have 10 and 40 week MA, a relative strength line, and then volume with the moving average of volume. And we love to keep it simple here. That way we spend more time looking at charts rather than looking at indicators. So we're going to run through a few broad market averages, then open positions in our model portfolio, and then we're going to take a look at what's out there in terms of new setups over the next few days. First up is the Nasdaq Composite, which after stalling near the prior high has pulled back to the 20-day moving average, which it undercut on Thursday and closed with a bullish reversal candle. So if the price can break above Thursday's high, and then the Nasdaq may have a shot of rallying for a few days. Due to the lack of leadership right now in the market, I believe the odds are increased for more chop in the short term. So even if the Nasdaq can move up for a day or two, it might struggle with this 11,800 level and then pull back in. We also can't rule out the possibility of Thursday's reversal failing and a test of the 50-day MA, which isn't much lower here. The S&P, just about the same type of action here. Reversal candle, if it can get through the 2-day high, could bounce for a few days. We'll have to see how it acts up near this 35.30 area where the prior swing high and the downtrend line is resistance. And the S&P reversed just shy of the 50-day MA, so if Thursday's low doesn't hold, the possibility for an undercut of the 50 MA exists as well. And the reason that we're a bit more cautious right now is because the past 2 weeks, as the broad market averages pulled in, we've seen relative weakness in many leadership stocks, leading growth stocks that have broken down below the 20-day EMA and given back a bit more than we would have expected. Which is why we'd welcome a week or two of chop here, which would allow stocks to work off the past 2 weeks of selling and set up lower risk entry points. On to current long positions in the model portfolio. We stopped out of pins today beneath the prior day's low for a 27% gain. We also stopped out of SC for a scratch on a break of the 20-day EMA. We'll continue to monitor SC for a re-entry point if it can reclaim the 20-day EMA and chop around in a tight range here within the next few days, and then attempt to break this downtrend line. So that's something to keep an eye on. FTCH triggered a buy entry yesterday over the range high. Volume was strong. The close was a bit weak with the close in the bottom half of the day's range. Ideally, what we'd like to see happen over the next few days is for FTCH to hold above this 2750 area, chop around for a day or two, and then attempt to re-break out next week. We're still long SQ from an entry closer to 170. We're looking for the price action to hold the 20-day EMA minus some wiggle room. If it holds up, great. If not, then we'll be out with a small gain. And we're also long JD from an entry around 82.50-ish. So we're down only about 1.5% right now. We're looking for the price action to hold above this 20-day EMA, the 80 level, and to tighten up a bit and then eventually attempt to break this downtrend line and clear 85, 86 on volume. And as you see on the weekly chart here, we have a cup. It's about 20% deep, and then we have the right side, and then we have this handle, which is now in its second week here. And I'd also like to point out that the relative strength line set a new high here ahead of price, which is generally a bullish sign. So with Thursday's bullish reversal candle in place, there could be, we mentioned the possibility of the market pushing higher during the next few days. If so, here are a few setups that we're looking at. DADA is a fairly recent IPO, cleared its downtrend line on a pickup in volume, and it's pulled back into the 9-day EMA. I think a move through the 3-day high here could trigger a swing trade. 4 is also potentially in play after breaking out or on a gap up to new highs. It's pulled back to near the 20-day EMA. But if it can chop around here for a few days, look for a break of the downtrend line as the entry. Though might want to watch out for earnings which are on 11.5. TSM could be in play over the downtrend line and the 3-day high here for a swing. ZM with the false breakout and pullback to the 20-day EMA. Actually stopped just shy of the 20, but could be in play with a move through Thursday's high for a swing trade. Back to JD, for those not already long, look to establish a position above 85.50 on volume. If NVDA can clear this downtrend line and get back above the 20, the 9 and the 5-day MA, could be interesting for a starter position here somewhere around the 546 area. YALA, it's a recent IPO. Look for potential downtrend line break, especially if the price can clear Thursday's high. And NET, which has pulled back on really light volume to the 10 to the 9-day EMA. Look for a break of this downtrend line and a move through Thursday's high as the buy entry with a pretty tight stop. And I just want to point out to new and older subscribers of our Wagner Daily that near the bottom of the report is the unofficial setup watch list, and there's quite a bit of value in this watch list, which usually consists of 2 to 5 setups per night depending on market conditions. And this list is geared towards experienced traders who are just looking for some ideas and are comfortable managing the trade on their own. And this list is in addition to our official watch list where we list the exact entry, stop, and anticipated target, as well as manage the trade in its entirety. But for unofficial setups, we only list the entry price. The rest is up to the individual trader to manage the position as he or she sees fit. And in our recent report from October 19th, we had set up in GRWG, buy over the 2-day high, GDRX buy in 52.53, and Snow buy at 246. So the GRWG entries at 1793. That was on the 19th, so the buy entry was over the 2-day high. That's up about 15%. GDRX from the 19th, 52.53, which may or may not have triggered on the 19th depending on how one trades the open, but it was certainly in play over the 52 level on Thursday. And then we have Snow, which from our entry at 246, which is over the high of 1016, is now up about 18%. So as you can see, the unofficial watch list is a great place for the active and experienced trader to start each morning to get a few ideas on what could be in play that has explosive potential. That's a wrap for tonight's video. Thank you for joining me. We'll see you again next week. Have a great weekend.